And the 6 o'clock alarm would never ring, but it does, and I rise, wipe the sleep out of my eyes. Well, boys and girls, having a sing-song, got my coffee, because we all know Scruffy likes a coffee. Must be coffee with Scruff. So, what am I going to discuss? Well, on these little chats, I just like to give you whatever's in my head across the week from emails or just conversations that I've had. And I do speak a lot about the failure of the industry, because the failure rate in this industry is huge. And it's not the industry's fault. Not really. Don't get me wrong, there is a lot to it, because it's always deemed as you're going to make fortunes out of little money. Well, let's put that myth to bed.
Fuck no!
You're not. You can make money from little money, and then you can compound it up over a series of sort of months and years, and then it becomes serious money. But most people want to do it in a week. Well, they're idiots, because it's just not going to happen. So what happens is they blow their account, and then they blame the industry. Case in point, when you look at the charts, they'll say, oh, the broker's going against me. The broker hunted me out. No, the broker didn't. It's just other traders are better at it than what you are. So really, it's your own fault. You see, power in trading is not knowing something what someone doesn't know. It's actually knowing what they do know. So if you think about this logically, if you can see a chart, well, there's millions of other people are seeing that exact same chart. Now, they will anticipate what you're going to do. Now, if you've got a professional trader, somebody who can actually move the markets, because we can't, not at retail level, but someone who could actually move the markets, and you see a price come into a level, your initial analysis of it going down will probably be right, because you go with the dominant direction. But in the short term, the market will push away from that level, and you'll think, oh my God, I'm getting stopped under it's a liquidity grab or anything. It's not. It's just some of the better traders who have the ability to move a market will know you're looking to short that. They'll also know roughly what your account size is. So they'll know that if you're taught 1 to 2% of account per trade, they'll know roughly where your stops are. Because if you've got £1,000 account, trading at £1 a point, 1%, well, that's 10 quid, it's 10 points up. So it's not difficult to work out where these stops are. And all he's got to do is push the market into it, take his stops out, it'll accelerate the market higher with his buy. He then sells his buy, and then it goes off in the opposite direction with some gusto. It's not manipulation, it's just being clever.
I'd buy that for $1.
So do heed those little words. It's not knowing what someone doesn't know, it's knowing what they do know. Now, the markets are kind of rigged to be against you, because you will naturally dive down into the low time frames waiting for a setup, when really the true vision of that is in the higher time frames. So how do you succeed? Well, it's knowing that. That's how you succeed. It's actually knowing what the operators are. So if you look at a chart in general terms, the chances are the general direction is probably correct. The part where you've got it wrong is the lower time frames, and you're trying to do microeconomics with zero knowledge.
I don't know where you get your delusions, laser brain.
So what do successful traders do? How do they combat this? Well, the first thing they do is they have a plan, a good plan. Doesn't matter what your trading system is. I mean, mine's very simple. I use multi-time frame analysis to gauge a direction. I use key levels and Fibonacci, because that's the way that I work. And I look at 3 major indicators to give me an idea of sentiment. I have one that tells me general direction. I have one that tells me momentum, and I have another one that tells me strength. Now, collectively, they work, and they work very well. How do you know that? Because you see me go to market all the time, you know, and when I'm talking to the guys in the squad, and you're very welcome to come along to the squad, I'll tell them what I'm going to do before I do it. And if they ask me, I'll tell them what their charts are going to do, and I'll track them. Now, when you're doing it that way, it's a little bit harder than saying, well, I did this. It's a lot harder to say it's going to do this, if that makes sense, because it might come as a shocker to you. I haven't got a time machine. Although I quite like one, actually. You know, I could have a good time with a DeLorean. I used to like a Doctor Who TARDIS, but I've kind of gone off Doctor Who at the moment. I think the new series has been terrible. Absolutely shocking. Give me Tom Baker and John Pertwee anytime. Actually, I didn't mind Peter Davison. Showing my age now, aren't I? I am. You know, I'll go back in time. What would I do if I went back in time? Oh, I think I'll be having a moment there. Because I'd certainly be in the dressing room where Princess Leia was.
You dirty old man.
And while she was getting changed, that was 1977 for that 82 or whatever it was for Return of the Jedi. In between that, we had Wonder Woman. The funny thing is, nowadays, we wonder if it is a woman.
Jesus Christ, dude.
I was getting off track for a second there, wasn't I? What a success. Oh, I was having a moment there, boys and girls. I was having a good moment. Oh, it's good being old. You can do what you like. Anyway, no, you have a solid plan. And you do have a solid plan. Now, that plan, as long as it's repeatable, will see you through. Now, you hear the term edge talked quite a lot. What's your edge in the market? Your edge is not the strategy. In fact, the strategy is very minimal to making money, you know, because every single one of them works. Every strategy that's out there works. Everyone. The question is knowing when to use it. And that's where the plan comes in. You know, if you're using moving averages and you're trying to do it on a 5-minute chart, wasting your time. You'll get caught with whipsaw all the time. If you're using oscillators, if the market's in a trend, waste of time. It'll tell you a new one. So you've got to be a bit careful. So at the moment, if you're using oscillators on, say, the DAX or any indices, they're not going to work. They're going to tear you apart. So you've got to be able to recognize chart conditions, but you've got conditions inside of conditions. So you could be in a bull market, which is the higher time frames, you know, your monthlies, your weeklies, your dailies, 4 hours even. If the sentiment of that is up, you're kind of in a bull market. But that's not to say there isn't a pullback inside of that market. So when you're trading on an hourly chart, you can be in a bull market but actually be selling it. And the question here is, okay, what's that got to do with slice of bread? Well, what it's got to do with the charts is how you target the thing. Because if you put a massive target in a pullback and it decides to turn back to the original trend, again, it's going to tell you a new one. So you've got to target correctly to what you're looking at. So, successful traders, they have that plan. They've also got their rules of engagement. You know, they'll look to see what the bias is at the beginning of each day. Am I going to buy this thing? Am I going to sell this thing today? Okay. They'll wait for clean confluences. Just told you, I look through multiple time frames and I break it into 3 baskets, and each basket has 3 settings inside it. So it's multiple layers of confluence. So it's not noise. It actually filters the noise out. They also track their results. You see me, I journal quite a lot. I want to see what the conditions are. I want to see if they're changing, and then I can reflect on it. And yeah, it's boring. In fact, it's terribly boring. Boring to the fact that you think, fuck yeah, now. Surely this has got to be exciting. I've watched The Wolf of Wall Street. He was there blowing cocaine up a prostitute's ass. I want to do that. Well, I don't actually. Don't know where it's been. I wonder if Winky's up for it.
Oh, here we go. No.
Nah, probably not. She's a good girl, but she's not a good girl in that sense. Anyway, well, she is actually, but that's another story for another day. I'll ask her when she's here. It's why we have like knobhead of the week. I just nicked this out of her drawer. I didn't actually. She'll kill us for saying that. That actually came from Benidorm when I was in Benidorm with the guys. We were joking about it, so we bought it for knobhead of the week. Anyway, so how do you get better? How do you become a better trader? Because I know sort of the freeloaders and the magic pill hunters have already switched off because they're thinking, there's no strategy here, I'm away. But that's the whole point. That's why they fail, because they'll jump from one to the next to the next to the next and they won't get anywhere. They don't understand that you've got to build something up. My Vanguard was built up from nothing in front of the guys in the squad. So they saw it from nothing and it's now at 115,000. I don't think that's bad for 3.5, 4 years or whatever it is. I put on average about 25 grand a year into it. So I don't understand where people's expectations are, because I think the expectations can throw you a spanner as well. If you have a realistic expectation, it becomes achievable. Then you don't lose heart and you can step forward to it. If you have an expectation you'll never achieve, you'll always give up, and then you'll always look for the next shiny object. So you've got to be a bit careful with that. So I guess really what you've got to do is choose your path. You know, are you going to be a gambler for the rest of your life? Oh, this system works, it's brilliant. Oh, this system works, it's brilliant. Oh, and talk a big game and actually get nowhere.
How does that gobshite get on the television?
It's not the road to success. The road to success is consistency. And consistency means getting up at the same time, looking at the charts the same way. A lot of the time looking at the same instruments over and over. But more importantly, when you're paid, know when to stop. Because even if you're just getting £2 or £3 a day, it's a brick inside the foundation. And those £2 or £3 add up. And not only do they add up, they start increasing. You know, so this week it's £3, next week it's £3.10, week after it's £3.40, and so forth. And eventually it becomes a good solid wage. You know, when I see these adverts saying, oh, give up your job in 90 days. Well, you can if you've got a lot of money and you've got a lot of experience. But if you haven't, suicide.
Jump out the closet, chop your little head off.
Absolutely, financial suicide. So, think about it this way. Can you do one thing to level up? Just one. Maybe log yesterday's trade. Maybe stop when you've had a winning trade. Or maybe even just look at one asset and understand fully how it operates rather than looking at multiple assets trying to find a trade. Now, I see this all the time. And to be honest, I've got very little time for sort of magic pill hunters and things like that. And it's pretty well documented. It's not that I'm being horrible. It's just those people are never going to make it. I mean, I'll watch people that they try and trade 24 hours a day. Ludicrous. The complete yo-yos. Right? I see people where they'll trade 7 or 8 assets in a day. And again, why? You can't concentrate that long. And 2, if you screw one, you'll probably screw them all. So again, no. I mean, and I'm just talking from my own experiences. So if I was going to give you some final thoughts, I'll take you through roughly what I do. I get up on a morning. I read the economic calendar. It's the first thing that I do, so I can see what the sentiment of the day is. I read the strength of the market. Now, if you can work it out yourself, that's amazing. If you can't, just go on Finviz, investing.com. There's plenty of strength meters. It'll tell you what product it is you're looking at and how relationship it is to the other product. So for argument's sake, if you're looking at the pound, that's your asset of choice, and you mainly trade it against JPY, you want to know how far they are apart from each other. If they're sitting on top of each other, there's going to be an explosion, but it mightn't be today, it might be in a couple of days' time, because they're just going to do that. But if they are far apart, well, they're going to do this. So of course they're going to move. So strength helps you. I mark my chart out. I do it once a week on a Sunday, but if I haven't done it, it's the first job I do. And I put key levels in from high time frames. Why high time frames? Goes back to what we were saying at the start of this chat. The bigger boys can manipulate the market, and they don't look at 5-minute charts. They look at big charts. So that means their orders are going to be in and around big levels. So I put them in. Then I put Fibonacci in. Why do I put Fibonacci in? Because it's proven to be repeatable in nature and in mathematics. And the chart is just mathematics. So that's what that does. Then I decide what the dominant direction is. And I nail it into one asset a day. One. So I might look at 5 or 6, but I'll think that's the best one. And that's the one I'm going to concentrate on. So I do that. Pick the bias of the day, and then I wait. And I wait. And I wait. I drink coffee, because we all know Scruffy likes a coffee. And then when the elements are aligned, I then go to market. Then I have mechanisms in place that if I'm wrong, I can get out for a small loss, scratch, small profit. I have mechanisms that I know the market will move against me from point of entry, because there's not many of us can nail it to the pip, or at least if you can you do it 100 times in a row? Well, the chances is nil. So therefore, if the market's going to move against me, I want to capitalize on that movement. So I do that. And then I trade relatively small in relation to the size of the account. So if it does go tits up, I've got room to let the chart breathe, which keeps me out of the noise of manipulation. And if I am clipped, didn't cost me that much. And then when I get out on the other end, the profit, well, that's just my payment for doing the right job. Now that's routine. I do that every day, every single day. And then when I'm paid, I quit. Whereas the one who fails, cries and chases the market all day will always cry. Cherish your thoughts. Anyway, just the thoughts of a scruff on a Saturday afternoon. And it's really come because I've been watching various things sort of in my feed and the messages that I get. And one of the biggest problems is, I had a question today. How do you know when to scalp? How do you know when to trade? Well, it's because I do it day in, day out. So it's like muscle memory. So of course I know, and I can just see it. I just physically can see it. But then I see other guys where they're trading God knows how many assets, certainly trading way too much and constantly losing. And all they're doing is spinning wheels. They're not traders, and they never will be. They're gamblers. And if you're a gambler, you don't belong in the trading arena, because you'll always lose. But if you have a plan and you're consistent, and those little consistencies grow, then not only are you going to be a trader, you're going to be a professional trader. Because if you're earning a wage from it, by definition, it's your profession. That's who I want to talk to. Till the next time. See you all soon.